Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another huge news week. We've got stock markets at record highs. Bitcoin and gold are starting to get very interesting at their pullback. We do welcome over 1,000 new subscribers this week, so thanks for joining us on this journey. A reminder that you can get $50 by commenting your favorite part on any one of our videos and the time in the comments below. We do want to congratulate our Josh Turnbull member of the month, and that goes to Campbell this week in our community of over 1,000 like-minded individuals helping each other learn as much as we can about crypto and the financial system. And let's get into the local news, where it was great to see the Tassie economy growing at 3.6%. So I often talk about a lot of the structural headwinds that are facing the Australian economy, but Tassie seems to be all coming off a low base, I guess you can argue, but great to see that the state is going well. One of the things that's been spoken about a lot is this war on cash lately, and a lot of people are unaware that KPMG are working very closely with the banks to implement a new payments platform. So all the banks are experimenting with blockchain technology as well as their own payments platform. So they don't want competing cryptocurrencies or cash or these other methods. They really want to jam everyone into this platform that I'm sure is going to be all about monitoring and limiting everything we can do. So the Reserve Bank gets the money printers ready. I did a big video this week that's been pretty popular, around 30,000 views already, about the RBA possibly bailing out the Australian banks back in July. And I still haven't had anyone really tell me what happened there with that $650 billion. So please check out that video if you haven't already and share it with friends and family. It is much appreciated. We've got to get people aware of what's going on. In terms of the housing market, we had ASIC, the regulator, come out this week and say, don't blame us for the lending slowdown. I think it was pretty clear that the Royal Commission showed widespread fraud in terms of lending that was happening by the banks. And yet now people are saying, well, there's not enough lending. It's your fault that house prices are down. So look, I'm with ASIC on this one. If it was that bad, we should expect to see a slowdown in lending. Construction insolvencies is on the charge again. This is the highest level since back in September 2013, and it's pretty clear when we talk to a lot of these tradies, look at statistics like the number of utes, light commercial vehicle sales, really dramatic decreases here. So it's those tradies that are running out of work, or if they do have work, they're being paid less. It's this labour market underutilization. So don't look necessarily at just the unemployment rate, which isn't too bad. The Australian economy did lose 20,000 jobs in the latest figures, but when you look at the US in terms of underutilization, it's really, really low. Whereas in Australia, it's remained a lot higher. People that want more work or want higher paying jobs. And this is the biggest issue facing the Australian economy. This was a fantastic article here by Michael Pascoe. I recommend you check this one out on the New Daily if you haven't already. So Josh Frydenberg, they've come out and said that, mega trends, huge reforms. We're aware of rising debt, the aging population, and other structural headwinds that we've spoken about to death on this channel. So let's see what sort of packages that they announce. I think they're still only planning on implementing these, a year, 2 years, 3 years away. And we need reform now if we're to overcome what I believe is unfolding as we speak. Another thing that happened this week was the Prime Minister doubling down on coal, and this sort of climate change, renewable energy debate really continues. And there's a war of words, which I really think it's immature. It reminds me of the crypto space, some of the stuff that's going on with our political leaders. But the Swedish central bank is now dumping Australian bonds over these emissions. So globally, we're seeing a green investment theme. Some investment funds and even some central banks and governments are now not investing money or giving money to countries or companies that aren't trying to become more renewable, climate friendly, offset their carbon and so on. So another, I guess, cut, death by 1,000 cuts for the Australian economy if we're going to be getting less and less money from outsiders that would usually be investing. Australia's also had this real crackdown on privacy. It feels like the last couple of years it's just been almost worse than China in a lot of regards. And this week we had a US judge rule that these searches of our cell phones and devices is unconstitutional. Now in Australia we don't have a constitution. And this is just the norm in Australia. We saw Andreas cancel his trip to Australia because it's known that they're going to steal your devices, and they're allowed to take everything off it, all that data, and you can go to jail if you don't give them all your passwords. So I just cannot believe that this has become the norm in Australia, and it's great to see a US judge set the example and put it back on, I guess, Australian lawmakers to say, well, hold on, when did this become constitutional or legal in Australia? But let me know what you guys think of that one below, and the Andreas interview is going to be out this week. So I guess we've really seen discontent at central banks and governments, policymakers globally. And just breaking a few hours ago, we had these riots in Iran. So they've had another rise in fuel prices, cost of living, these sort of arguments that keep coming up, starting to burn down different banks and central banks there. So this story, I didn't have a lot of details about this, but something that is currently unfolding. And one by one, I keep saying it, it's just this civil unrest, and people are being strained, and they're just not happy with the way the system is working for them. Now, China is starting their trials into restricting cash, just like we've seen in Australia. $10,000, it's already been proposed, and Robbie Barwick, the CEC, and Martin North, those channels have done some great videos about this recently. They're proposing that they write it into the regulation that they can just flick a switch and change that to $5,000 or $2,000 in terms of the cash ban. And this is the sort of thing where I say Australia's worse than China. We now see China following suit. They're planning on launching their own cryptocurrency, as we know. China are talking about even rewarding their soldiers in crypto soon. So I've got an interview with Davi Wan about everything that's happening in China in terms of the world of crypto, but they want to monitor absolutely everything you're doing. And yeah, they look to be clamping down on cash as well. Now, Chinese soldiers have been deployed on the streets of Hong Kong, and the stated reason is to help clean up. So I think this is really not going to help things. That friction between Hong Kong and China, now that they've actually got soldiers on the street in Hong Kong, it's really been bad there lately. We've seen those people getting set on fire and, throwing bricks onto roads, and the economy is now in recession because of what's going on. So is this going to make things worse with China actually deploying soldiers into Hong Kong now? Again, if you're in Hong Kong, let me know your thoughts in the comments below. In terms of China, it's still growing a lot better than a number of other countries, if you believe that 6% figure. So Chinese bonds, $7 billion worth for sale, $1 trillion oversubscribed. So this is what I'm talking about. When there's no growth and negative interest rate bonds everywhere else, people are so desperate for any bond that's paying a higher yield. So absolutely ridiculous to see $1 trillion trying to chase $7 billion worth of bonds because they are offering a higher yield. Chile was the latest country to join the list of inflation bordering on hyperinflation. So you can see the value of their currency there collapsing, or if we flip the chart, we'd have that parabolic blow off with a hyperinflation there. So yeah, collapsing to another record low. Really unfortunate. Venezuela, Argentina, Chile, Zimbabwe, that list continues to grow of fiat currencies that are losing their value. Over to the US now, where I want to talk about the cost of living. So there's been some good documentaries about Hong Kong and how expensive it is to live there. And I think people are really starting to ask themselves, well, at what cost? Why am I paying this much? Would I be better off moving down to somewhere? I've had a lot of people say, what's the cost of living like in Tasmania? Now, obviously, there's less jobs and there's reasons for both sides of it, but so many people that are paying these ridiculous rents in big cities around the world, I think they're really going to start to ask themselves, well, why? Would I be less stressed? Would I have more time, less travel to work if I move to a regional area? Can I do my job there? And with the internet and whatnot, I think we are going to see that be a real demographic change with people moving out of big cities. And it really is ridiculous to pay these sort of rents to live in a little shoebox. Now, the tech stocks continue to grow at a time when a lot of the smaller companies aren't really breaking out to new all-time highs, even though the overall stock market is. So Apple is now bigger than the entire US energy sector. All that fracking, all the oil and gas companies, Apple is bigger, and Disney is bigger than the top 5 European banks. So we know that European banks are struggling, but interesting to think about the type of companies that they are, and how much bigger they've grown than previous sectors. Energy sector, the banking sector, they used to be huge, huge sectors. Now, one of the reasons behind this is that the Swiss National Bank are printing money out of thin air to buy stocks. I don't know how that is fair or if it's all part of this valuation out the window style stuff that I keep talking about. But yeah, they now own 94 billion in US stocks after they went on a bit of a buying spree in Q3. So this is one of the reasons why the US stock market is at record highs, because central banks are printing money out of thin air to buy shares. And this all leads to inequality. I've done plenty of videos about all that. Google launching checking accounts. So we've seen Apple launch Apple Pay, Facebook want to launch Libra, Google want to get into this banking and get onto Wall Street. I've said it 100 times, it's so good. They just take their little clip, the banks, and now Google look to be getting into that space and really making regulators and banks question, well, what is money and who gets to issue it? Trump in the headlines again this week, calling for negative interest rates, criticizing the Fed. US growth really slowed this week. Consumer confidence and comfort has crashed the most since the GFC. That is not good. Remember, the US consumer was one of the positives holding up their economy, as opposed to Australia, where retail sales and the consumer is really indebted and not going really well. So if the American consumer stops spending, that is really bad. We've also seen industrial production plunge, worse since the GFC. I keep saying it. So that is not good. And we've had a few little scares in terms of data come out of the US, but these are the first signs that it really is a number of sectors now that are pointing to a slowdown. The Fed is printing money. They're not disclosing which banks they're handing it out to. No surprises there. This is continuing at bigger and bigger amounts. I think we saw 300 billion this week. And economic growth is now close to zero for the fourth quarter, according to the Fed. So some of the stats we got out in terms of their forecasts and as well as the actual data, really left field. People were expecting, nice growth, 2% in the US. The US economy is chugging along okay, but talking about zero growth, that really increases the case for the Fed to join the party to drop interest rates to zero or negative, as Donald Trump has been calling for. So despite all this, is anyone fearful? The VIX is the volatility index and it's hit a new record short. So what does that mean? If people are not expecting volatility, people are not expecting a correction, everyone is on the one side of the boat. Record amount of people betting that even though volatility is already low, that it's only going to go lower and that stock markets are only going to go higher. So if anything happens, this is going to be a historic short squeeze. And if you don't know what a short squeeze is, again, I've done videos on this. So when we have a look at the illiquidity index and the VIX that we just spoke about, we can see a nice relationship here. Well, in terms of the correlation, it's nice, but in reality, what it shows is that when volatility increases, that's when illiquidity increases. So just when everyone wants to sell, that's when everyone removes their orders from the stock market. And I've done videos about the algorithms and high frequency trading with all these bots trading against each other in milliseconds. It's not real volume. So when a big hedge fund decides that, hey, we need to sell these shares, all that liquidity and orders get removed. And there's no one to sell to, and that's when we can start this cascade. So it's not nice. I hate talking about all these bad headlines, and I'm not the sort of person that actually thinks that the stock market crash. You guys know I've been saying I think stocks are going to break out to record highs because valuations and fundamentals are out the window. It's all about how much money the Fed's going to print and how low interest rates are going to go. But if it does get nasty, this doesn't bode well. Things are going to get rough, and the Fed, the central bank's going to have to step in and do even more crazy things to keep markets from crashing. Another interesting chart this week was the ECB and the amount of QE, the amount of money printing they were doing compared to GDP growth. And what we see here pretty clearly is as they tapered off the amount of money they were printing, they just slowed it down or leveled it out. GDP growth has collapsed. So Martin North and I talk about this as credit impulse. So it's not just the amount of money you're printing or the amount of credit and debt people are going into that has to grow. It has to increase the rate that it is growing, or the system starts to unfold and we get deflation. So not nice there in the EU. Now, Germany have downplayed stimulus hopes. You got to laugh at these headlines. So if Germany had have got a negative number, they would have been officially in recession. So guess what number they got? 0.1%. Maybe it's a coincidence, or maybe the powers that be can avoid that headline recession and a bit of fear in the European economy by printing 0.1% rather than zero or a negative number, despite a lot of the stats showing that Germany's not tracking that well. Now, Germany's another strong economy, and if you had told them a year or 2 years ago that you'd see civil unrest and farmers blockading in cities, revolt against globalist environmental regulations, I just don't know what to say sometimes when I'm here and reporting these headlines to you guys. There's all these people that have very strong opinions, and it seems we can't have mature debates about what's going on and get some policies in place to try and keep everyone happy, particularly the majority that are being squeezed and that are heavily indebted. Now, Vladimir Putin came out this week at an energy conference, and this is the de-dollarization theme we've been talking about for a long time. The dollar has enjoyed great trust around the world. For some reason, it is used as a tool for political struggle, and this is what Mark Carney at the Bank of England has been talking about as well. So many countries are turning away from the dollar. He later went on to say that he thinks that the US dollar is going to die in the coming years. So, war of words. I think the next global war is going to be fought in the economic realm online. Now, central banks see negative effects of stablecoins. Obviously, this undermines their power and all the privileges that they have with more and more people issuing their own money and joining this financial sector. So yes, don't be surprised when they say bad things from those that are looking to take away their power. Now, a final thing I want to add here from Russia was the de-dollarization theme. They're looking to launch their own payment system. So Brazil, Russia, India, China, and I have forgotten the S there. Sorry, guys. Let me know down below. I think, is that South Africa, South America? But anyway, these other countries want to launch their own system to, again, get away from SWIFT and the US banking system. So wrapping this all up, headlines continue to say that 2020s are looking to be a really rough ride. It is not going to be as good as we've had it, or even if stock markets keep charging up, it's not going to help the average person. And there's some sort of economic downturn coming, and lots of global banks are now warning against this as well. So it was Merrill Lynch with this headline this week, but sites like ABC even now reporting these doom and gloom headlines rather than the zero hedges of the world and those that tend to be a little bit more underground. So with all this happening, I continue to say it, guys, get educated, learn how to protect your wealth and build your nest egg. If you can do your own self-managed super and whatnot, take advantage of this free consultation with our channel sponsor, New Brighton Capital. And even if you can't, just learn about what your super is exposed to. We've got the partnership with eToro. We're going to extend this. It's been very successful. So you can get a 10% deposit bonus credit when you sign up, and we'll send you $100 Bitcoin as well once you make your first trade. So this is for Australians. You can even help get exposure to more ETFs in your self-managed super through eToro. So I think gold is starting to get attractive. I did my video about thinking it was overbought and that we're going to have a correction when everyone was FOMOing into gold and asking me how to buy it. And I said, just be patient, hold off. I think it's starting to get attractive now. I'm thinking of putting together a bit of a portfolio with gold and silver and Bitcoin, some cryptocurrencies. And if you guys are interested in copying my portfolio, you can do that on eToro. So I'll set that up soon if there's enough interest. The stock market at record highs here. Even if you don't plan on doing a lot of trading, I recommend just getting your mind around how to do it. Learn how to short the stock market if it's going to go down or for when it crashes. Learn how to short a housing market ETF with a little bit of play money or just the practice account that they offer. Learn how to buy gold if we're going to get a rally in gold. So it's these lifelong skills that you can build by trading, and I think it's a no-brainer at the moment with that sign-up offer. So into the crypto news, and we had some more interesting data from Independent Reserve this week. 1 in 5 Aussies are likely to buy crypto in the next 6 months. We continue to see a growth in retirees, the baby boomers that are getting interested in crypto, and pretty high percentages of those that own alternate currencies here, the XRPs, Ethereums, and Litecoins, as well as Bitcoin there. Now, I know Aussies love crypto, but we continue to see a lot of scams going around. So OneCoin actually lasted 3 or 4 years. Typically, these Ponzi schemes collapse within a year or two. So finally, they've caught these co-founders. They're facing 90 years in prison. I'm hoping they go out and try and chase down the people that were pushing it, particularly here in Australia. Carrot Bars is another one that I've been warning against. Anything that is trying to get you to sign up people and give you a bonus and promising monthly returns, guys, it is a pyramid scheme. I've said it 100 times. So carrot bars have been ordered a cease and desist. I know, the cloud tokens going around. There's so many out there, guys. Please just stick clear of them and show your friends these sort of news announcements when they're trying to get you to sign up to these scams. PayPal has stopped all Pornhub model payouts. So I know this is a little bit of a taboo topic, but this is an industry where it's really hard to get banked. The models don't make a lot of money because of all the middlemen and everything that they have to, go through in terms of just to get that money and the credit card challenges they face. So yes, this is a problem that Bitcoin and crypto solves. There's a few good projects in this space that have built really great technology. So I might have them on the show. I think it would make for a really interesting interview and podcast. But yeah, let me know what you guys think of that announcement below. Crypto research firm Missouri raises $4 million, backed by Coinbase, Blockchain Capital, some of the big boys. They offer a lot of great free services, so head over to Missouri. They've got more accurate data than CoinMarketCap. But this professional research is something that is really blossoming and getting more experienced investors confident with the investment thesis around these coins. So this is something that we have launched as well recently. We've got our members will now receive this monthly research report. So if I head down here, I just want to give you guys a bit of a preview of what we've been working on. This is a fundamental analysis. You're going to get 5 a month. And is it going to let me scroll down here? No, it's not. That's always the way, isn't it? Technical difficulties. But synthetics, Maker, a lot of the DeFi projects, we're trying to cover 5 interesting projects every month. So you members will be getting that for free. Synthetics has been added to the Coinbase wallet. This one is now up well over 1,000% since we covered for you guys. So I hope you've made some nice profits on that one. Another backflip here, we saw Alibaba deny their partnership with Lolly. So a bit of a confusion. The crypto space is renowned for announcing these big partnerships when they're not real, particularly in China and projects like Tron and whatnot. But there's a number of Aussie apps that are coming out that are going to allow you to earn Bitcoin rewards and travel by bit. You can book your flights, get Bitcoin back. So look, we'll talk about that more in future. But a lot of these people are trying to get this Bitcoin rewards space. VeChain's had an incredible month, up 50 or 60%. More T traceability partnerships. Great to see real world use case for these type of projects. Coca-Cola looking to trace every bottle and redefine the supply chain using a blockchain there. Canada's biggest bank announced that they're exploring the launch of a crypto trading platform. So they shut down customers' accounts that were dealing with crypto, and now they want to launch their own exchange. I've got an interview with an XRP-based platform that are looking to partner with this Royal Bank of Canada and issue securities on the XRP chain. So keep an eye out for that one as well this week. We've got Binance and HTC launching crypto smartphones that support Binance Chain. This week I did another big write-up and thesis, fundamental analysis about Binance Chain. I think it's getting interesting, the price that it's at as well for longer term. Brave, another great project that we've been supportive of. I recommend you all get the Brave browser if you haven't already. It blocks ads and it blocks trackers. They've now launched the full product. It was the sponsor of the Joe Rogan podcast this week, so a lot of people downloading that now, and we saw a bit of a price spike after the Joe Rogan episode as well. SingularityNet, their artificial intelligence project. This is one that we covered very early on at ICO stage for you guys as well, integrating with PayPal, and this one also is great to trade, really. It does go back and forward and really jumps on these positive announcements. Multi-collateral DAI, I've got my Maker shirt on. This is something that I've been waiting for years, and it is coming out. It's been approved by token holders there. Great example of how we can decentralize governance and all vote for what's best for the system. And there's a few coins that are going to really benefit from this multi-collateral DAI. I'll talk about what to do this week as well if you do have a loan out in DAI. Most exchanges will support that automatically for you. Another piece of news I found interesting this week was Bitcoin and Ethereum node count spread across more than 100 countries now. And if you saw the interview we did with Roger Ver, this was one of my main rebuttals talking about increasing the block size. And I won't go into detail, but I did timestamp that for you guys if you want to skip to the parts that you find interesting about the battle between increasing the block size and reducing the node count and how we keep decentralization. I've had a lot of people ask me to get Craig Wright on. The BSV fans are saying if you had Roger on, get Craig Wright on. look, if Craig ever proves anything, then I'm happy to have him on. But until then, he continues to have more and more of these predictions. He said he was going to kill Litecoin and Bitcoin and through SegWit by this time last year, and it hasn't happened. So these empty promises and, you know, the judge throwing out his case and whatnot. I know the BSV guys get upset when I say this, but I just haven't seen any evidence to suggest that he's Satoshi as he claims. Moving on there, the next article I had for you guys was about the CFTC chairman talking about Ethereum 2.0 possibly being a security. So with... we're still recording? Sorry, guys. With the proof of stake chain, the upgrade to 2.0, one of the things that it is doing is dispersing those rewards to the holders of the token. Now, this to me is pretty similar to mining, but the CFTC chairman saying that might be too similar to a dividend. But he cleared up his words. I think this would affect EOS, Cardano, every proof of stake chain really negatively. So something we want to keep an eye on, but he did backtrack a little bit the next day with his comments about Ethereum 2.0 being a security. The SegWit upgrade has really helped the congestion of the Bitcoin blockchain and the mempool, but this week we saw a huge number of transactions come in at the lowest fee, 1 Satoshi per byte. So Binance have looked to have pushed all their transactions, all the little dust transactions of really small amounts of Bitcoin. They want to, aggregate all those together. So what you do is add those fees, add those transactions with a really low fee. And whenever Bitcoin isn't chugging along too busy, it will use these transactions and process the lower fee transactions. So basically, this is a way of saying there's no rush. When the chain is free, let's get all these transactions together. We don't want to be doing it in future when the chain is really congested. And again, this is something that is going to continue to be debated going forward about how we can make Bitcoin more efficient. But Andreas and I will dive into that this week. One of the most disappointing bits of news this week from me was Bakkt rolling out cash-settled Bitcoin futures. So the whole idea of Bakkt is that it was backed. Now, they came out and said, yes, we've got our physical Bitcoin delivery products, but yet a couple of weeks later, we're going to roll out cash-settled products. We're going to roll out options. So to me, this is a wolf in sheep's clothing. I'm really disappointed about this. We don't want this to become like the gold market and the silver market and have all these shorts and naked shorting, derivative products, rehypothecation, all this money that wants to get into Bitcoin just ends up lining the pockets of the people that are offering cash-settled products rather than going into real Bitcoin. So, yeah, if you're watching this channel, you're probably holding your own Bitcoin and you're not going to use this style of product. But this is actually really disappointing and a step backwards for me. But let's get into the technical analysis, and this week Bybit are sponsoring the TA again, guys. If you want to know about the different order types, and they've got a really easy to use exchange if you're a beginner, head over to Bybit there and check out how nice and easy that is to use. All right, so if we have a look at what's happening right now, we are still in this falling wedge, which it feels like we've been in forever. Declining volume generally here. There's been a little bit more selling than I would have liked, but we're at some really, really crucial levels. So let's see if I've got them all marked here. I don't. But basically, we've got a lot of these daily closes and weekly closes around the next $200 or so increments down below. So if we break down from here, I think that we're going to see a pretty strong bounce unless we get some bad news. I really think that there's a lot of traders that are viewing anywhere from, the bottom of this wedge to 7,800. We had a lot of trading volume take place here as well. I'll just bring up the volume profile for you guys here. Again, I did a learning unit for our members on this week. But basically, when we had a lot of volume take place here, that naturally gives us a bit of support. So if we get a nasty breakdown below here and we don't see a V-shaped recovery, that's when I typically would be a little bit more worried. But in terms of what's going on, it's all been fairly healthy in terms of that correction so far. And if we look at our cycle brackets, we are expecting a push up to start right now. So I know it's been a tough couple of weeks as this correction has continued, but we have to expect these things. And zooming out, we've got this big falling wedge. It's come back and been retested. There's a lot of reasons to be bullish despite us being in this downtrend for weeks and weeks now, guys. So look, head over to nuggetsnews.com.au for more information on anything we do or to claim your $100 free Bitcoin when you sign up to eToro. Otherwise, smash that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.